Hello, I'm Iona Bain, Young Scot's resident finance geek, and I'm here on your feed today to chat about credit cards. What are they? Who can get one? What are the risks? And what's it all got to do with your credit rating? Don't worry, I'm here to explain all. So to put it very simply, credit is a form of debt that's a bit different from a loan. And with a loan, you receive that once and you pay it back over a certain period of time. But a credit card is offering you credit on an ongoing basis. So you can spend on your credit card now and pay back the balance later. Now, with a credit card, you receive a statement every month telling you how much you've spent on it and therefore how much you've got to pay back. But you're given a choice. You can pay back what you owe in full, or you can pay off some of what you owe. And if you go for that second option, you'll be charged interest. This is calculated as an annual percentage rate, or APR, and for credit cards, it's typically 21%. Now, I say typically because actually the interest rate you'll be charged, it really depends on your credit rating. This is a magic number that's put together by credit reference agencies, and it essentially tells lenders how reliable you are as a borrower, i.e., are you going to pay back what you owe? Now, the higher the number, the better. And if you're seen as a good or excellent borrower in the eyes of credit reference agencies, then you're going to be offered a lower interest rate. But if you've fallen behind on your credit repayments in the past, then your credit score will be lower and you'll be charged higher interest, a higher APR. It's going to be more expensive for you to borrow money. And you'll also not be able to get some of the best credit cards on the market. And if you were to apply for those credit cards, you'd get turned down. And that would also harm your credit score. So there's the risk that you fall into a bit of a negative spiral. Now, credit cards, as you've probably already started to realise, they come with a lot of risks. Firstly, you might fall behind on your repayments, and if that happens, your lender can refer you to a debt collection agency. Your credit score will be really damaged, and in the worst case scenario, you might end up with a legal judgment against you known as a decree, which is really serious. The second big risk is that you might be tempted to just make the minimum repayments rather than clear the whole balance on your credit card each month. And that's going to make your credit card debt way more expensive in the long run. And this is because of something called the anchor effect. Now, credit card companies suggest a minimum repayment figure as an anchor to try and influence you to stick to that number rather than pay back more. So let's say you borrow £2,500 on your credit card. The interest rate is 17% and the minimum repayment level is 2% or a minimum of £5, whichever is greater. Now, if you just repay the minimum each month, it'll take you 38 years to clear the debt and it'll cost you an extra £5,000. But if you pay back that £2,500 within 56 days, you're charged nothing extra. So beware of the anchor effect. And the last big risk with credit cards is that you start to rely on them and you end up overspending. And it's so hard to remember that credit is not free money. It does have to be paid back. But here's the thing, if you use your credit card in a smart way, it can help you build your credit score so that you can borrow money in the future for things like a mortgage, which you need to get on the housing ladder. So my tips for being credit savvy are: 1, only use your credit card for a couple of fixed expenses like subscription services. 2, set up a standing order to pay off that credit card balance after you get paid. So then you're not having to think about it with the risk, of course, that you might forget about it. And tip 3, don't take your credit card out with you to the pub or to the shops or when you're out and about. I keep mine in a drawer in my house and I only use my debit card for everyday spending. Now, I do use my credit card to pay off a few fixed expenses, which keeps my credit score looking nice and healthy. But I also use my credit card for more considered purchases like holidays, because then I can benefit from something called Section 75, which is a clause in the Consumer Credit Act. And this means I can claim back money from my credit card lender if something goes wrong, i.e. the holiday firm that I booked with goes bust. And crucially, you can't get this protection on debit cards. So that's why having a credit card can be a good idea. You've just got to manage it in a smart and responsible way. All right, folks, that's my very quick 101 on credit cards. I really hope it's been helpful and I'll see you all again very soon.